British Chambers of Commerce's latest survey of 6,000 businesses found the UK recovery is in a precarious state in the first quarter. It says the results are disappointing and that the overall picture remains worrying. The report describes a sharp falls in manufacturing confidence, particularly disturbing. That's the thing they single out. Services industries picked up from what the BCC called a dismal end to 2010, but the results were still mediocre by historical standards. The BCC says that the economy will probably return to growth, but with a weaker than expected rebound from the fourth quarter contraction, and that would mean output levels are only marginally higher than they were in September 2010. So to tell us more about it, I'm joined by Adam Marshall. He's the BCC's Director of Policy and External Affairs. Thanks so much for coming in. So this is a pretty dismal forecast, isn't it? Disturbing, worrying, disappointing. How would you describe the UK, the state of the recovery right now? Is it really this bad?
I think what the figures show is that the recovery is fragile and remains fragile. We had a terrible quarter in the fourth quarter of 2010. Lots of people say that was down to the bad weather we experienced and expectations about changes to taxes at the beginning of 2011. So we're back in growth, which is certainly a positive thing, but there are too many features of this forecast that give us cause for concern.
And where do your particular causes for concern fall in terms of industries?
Well, I think if I were to put it simply, I would say there are 3 C's here. One is costs. The cost pressures on businesses, and particularly those importing raw materials, are continuing to go up. The second is cash flow. Both manufacturing and services business telling us that cash flow remains a big problem for them. And all that feeds into the third C, which is confidence. As you said, confidence levels definitely coming off the boil, not as strong as they were towards the second half of last year.
Services industry is doing pretty well, though?
Services industry is starting to improve. I think we were very disappointed and worried by the weakness of the services industries in the second half of 2010, given that they make up 3/4 of the UK economy. But some minor improvements this time. They're not quite where we want them to be, though, at this stage of the recovery, hence our continued concern.
A fragile recovery, what could completely jeopardize it?
I think an early interest rate rise is something that we're saying could jeopardise this recovery. Know that the Monetary Policy Committee, the Bank of England, is in a difficult position this week, given the inflationary pressures I talked about a moment ago. But we don't want them to go too early. We're hoping they can hold off for a few more months, give businesses a little bit more time to absorb some of the public spending cuts that are about to come through, which of course have an impact on the wider economy.
I mean, we're hearing concerns about the level of inflation in Europe, in the US. I mean, the UK, when you compare the figures here, pretty astronomical in comparison. Inflation accelerated at the fastest pace in more than 2 years. Something has to be done about this, doesn't it?
Well, I think the MPC needs to hold their nerve. It would be premature at this stage to plonk higher interest rates on some of these businesses that we need to grow. We know probably at the back end of the summer that that rate rise will have to happen because of those inflationary pressures, but we hope they don't go too early. Give businesses a few more months, let the recovery consolidate first.
Okay, you're expecting a rate rise to 1.25% by the end of this year, right? In 3 25 basis point moves?
Yes.
So that's pretty gradual.
I think it has to be gradual. The fragility that we're talking about, that we're seeing in the business community, in the real economy up and down the country, suggests that anything more would be too much and could have really adverse consequences for the UK as a whole.
What more needs to be done to stimulate small and medium-sized businesses? You don't see the same level of enterprise here that you would see in the States, for example. What more could the government be doing there?
I mean, it's interesting. The government's made some very important promises in its recent budgets about 2 weeks ago, where it said it was going to strip back barriers to growth, things like regulation, which it said was a bit overbearing for small and medium-sized companies, and the planning system in the UK, which means business expansion is so difficult. We've got to hold them to those promises. There have been similar promises made in the past, and the burdens on business have continued to grow. So we need to ensure that the reality on the ground matches the rhetoric. What's more, those are policy changes that aren't going to cost the UK government money at a time when it hasn't got much in the coffers.
Just to put all this into perspective, you've described the UK recovery as being fragile, but when we look at the data, it does point to overall continued growth, doesn't it?
Absolutely. And one thing that we face in the UK that perhaps isn't as strong in other markets is a media that seizes on every survey as an indicator of a double-dip recession. We don't think we're going there. We don't think that that's the situation that we will be seeing over the coming months. We do see continued recovery, and we're looking at about 1.5% growth for this year. Not great, pretty anemic, but certainly back in the black.
Adam Marshall of the BCC, thanks so much for coming in.
Thank you.